Hello everyone and welcome to today's Morning Report chart analysis videos on Tuesday 27th of September with me, Richard Perry, market analyst at Hantec Markets. It's the morning after the first presidential debate and it seems as though Hillary Clinton came off the better of the two candidates. Seemed as though that the market reaction has taken on a bit more of a risk positive attitude this morning, and that would generally be seen with Hillary Clinton, who is sort of taken to be the sort of safe candidate. Markets really have no idea how to seriously react in the event of a Trump presidency. But Hillary Clinton is seen as sort of a bit of a continuity candidate, so markets have taken on a bit more risk today, and the dollar has taken a bit more strength. Let me just show you some of the moves. Dollar sort of basically flat now. Actually, well, it was stronger early on. It's now sort of given up some of those gains. Treasury yields were also were pulling higher. 2-year certainly has pulled higher, but the 10-year a little bit less so. But still, Treasury yields sort of higher is generally tends to be seen as a dollar risk, dollar positive move and risk positive move. And the other assets such as gold and also the yen are also a little bit under pressure today. So markets taking Hillary Clinton's performance yesterday with good heart. Now, what we have got generally is that will that sort of attitude continue, because obviously this is the first of 3 debates, and also then you beg the question, do the debates actually matter? Well, certainly the debates didn't really make too much of an impact on the Brexit decision, and traders will, I think, have that still in their minds as this presidential sort of election campaign comes towards a close. So markets have taken sort of a marginal risk positive view, but obviously I think they'll be with a certain amount of pinch of salt due to the fact that it sort of does it actually make much of a difference in the end of the result. So it'll be interesting to see how this one pans out, but at the moment risk positive nonetheless. Now, throughout the day you've got a little bit of US data to consider, and that's what the markets will be focusing on as we go on. Nothing really in terms of European data, but sorry, my chart was not in the right position. So let me just show you. Not really anything out this morning, but then you get into the US data this afternoon. You've got S&P Case-Shiller House Price Index, and that is expected to stick at 5.1%, basically around about that 5 to 5.1%, depending on your forecasts. Consumer confidence then at 3 o'clock. Oh, sorry, just before that, Markets Services PMI flash data there, 51.1, so marginally improved. But the consumer confidence will be the main focus today, slightly lower than the 101.1 last month, but that was a strong number, wasn't it? And you can still say that the that the consumer confidence data is still pretty positive at the moment. And finally, with the Richmond Fed Manufacturing Index was -11 last month. That was the lowest since 2013, January 2013. It's expected to be -2, so again negative. But these are all sort of second-tier bits of data, really. And the markets, I think, are still going to be sort of reacting to this presidential debate, really, as the days pan out. So that takes me to my chart of the day, which is the silver chart. Now, what we have seen in gold and silver is this consolidation range in the last few months. And silver has sort of traded around this pivot line, 1920, and it's sort of turned a corner once again. It had rallied on the back of the Fed announcement last week, but then it's found resistance underneath that 2013 resistance, which is the September high. 2006 was the high last week, and it's just dropped back again. And these two bearish candles suggest that the selling pressure is sort of dragging it once more back towards this pivot line. Now, this is a pivot support area, really. If you look on the hourly chart, you'd say between sort of 1920 and 1930 really is sort of an old resistance. 1930 turned into new support that pretty much almost hit yesterday's low. But I think what we've seen is a a range play really, and that 1920 level is in the middle of the range, so that is taken to be as a bit of a sort of a bit of a gauge within the range. So if you see a drop below 1920, then you're probably going to come back towards the 1850, 1860 level, which is the sort of support within the band over the last sort of couple of months. But there isn't any real direction on this chart. You've got the RSI, which turned lower from 60 up from 40. MACD lines basically flat. Stochastics have just turned lower to reflect this sort of near-term corrective move. But to be honest, it's sort of very much of a range-bound scenario here on silver and also on gold, which I'll talk about in a bit. But certainly, I think the precious metals really are sort of settling in to sort of the medium-term sideways range, and for silver certainly 1920 is a key sort of near-term pivot level that acts as a gauge. So just trading, if it finds support above 1920, that's reasonably positive, and you could see it sort of just buzzing around. But below 1920, I think you could see a drop back towards the range lows again. But for now, it's holding up on the support, as I said, on the hourly chart. That support around 1920, 1930 on this chart, and it's just sort of turned up on the MACD lines. But it'll be interesting to see if the MACD lines fail at neutral, because that could be again a sort of suggestion that we're continuing this sort of sequence of lower highs which we've posted in the last few days really. Latest lower high comes in yesterday at 1965. And then 1975 above there. So a few levels for you to work with there, but very neutral outlook on silver, and pretty much in keeping, I think, across the markets really. You're not really getting too much direction on a lot of these charts. So I wish you good luck in your trading, and I'll speak to you later. Thank you.